we have got to, we're watching the country slide into this recession. I saw somewhere where they said it's a collective retreat with tens of millions of people waiting for some sort of solution against Corona. New York City dining was banned in restaurants, bars, cafes. Public schools are closed until April 20th. You might as well close until September at this point, which I wouldn't be surprised if we start seeing some of that by the end of next week. So it continues to impact the economy. Look, we've got a unique situation. We have something that is impacting supply and demand at the same time. We had a trade war that was dramatically impacting the demand of oil. But the supply of oil was plentiful like it is now. This is both impacting supply and demand, and it's a real issue. As we evaluate this, it's not a Republican or Democratic thing. Wall Street Journal NBC poll showed that 81% of the GOP voters think President Trump has done well. 84% of Democrats think the opposite. So from a political standpoint, it's split right down party lines. Independents, I think, are leaning a tiny bit more to Democrats if we want something to be concerned about with the polls. But, you know, the big news is the Federal Reserve. And some of the things that I said to the press last night was, look, we've cut rates now we got 0% rates to 25 basis points, 0.25%. Basically, what the Federal Reserve did on Sunday was he took all of our ammunition and, blew it up. It's done. We don't have any ammunition. My concern is that I hope Jerome Powell didn't do this thinking it was going to help the markets. He also added $7 billion worth of quantitative easing. And that is just the beginning. That's on top of $2 trillion we've already spent. So we're almost up to $3 trillion, and it's just the beginning. And when I say it is just the beginning of what is going on in the credit markets. I believe the Federal Reserve was saying, hey, look, we need more fear in the markets. We need more uncertainty in the economy. It's far worse than anybody thought it was, so we've had to cut rates. He's all but guaranteed that we are going to be in recession by the end of June. That's what he's done. He couldn't have thought that it was going to settle things down. We are going, or we already do for that matter, look exactly like our European allies. I guess that's going to make the president happy. I'm sure it's going to make Jerome Powell happy. And worse yet, that's not the bad part. The bad part is they think it's going to do some good. It's not going to do any good. It's a total waste of ammunition. We just shot it all into the dirt. We didn't hit any targets. We didn't do anything with it. All we did was increase our debt and the likelihood of a recession. Now, obviously, he didn't really say those things, but that's what he was saying by cutting the debt. That's what he was signaling to the markets. What did the markets do last night? The futures, they tanked. It looks like Christmas Eve of 2018 all over again. So here's what I don't understand, and here's what I talked about last night. When we look at what is going on, first of all, it was a horrible move that the Federal Reserve did. I don't care what anybody says. It was a horrible move. You can rationalize and say it was all right. I hear everybody on the news, and I'm reading, well, the Federal Reserve did a good thing, did what he could. No, he didn't. He didn't do a good thing. And I would submit, I don't know this, but I would submit it's the first time ever the Federal Reserve ever got involved in any kind of transitory situation where they made dramatic moves in monetary easing over something that's temporary. Something that's temporary. Or is it? Does the Federal Reserve, do they no longer believe that lower oil prices And the problem with coronavirus, 2 black swans, do they believe they're no longer transitory? The Federal Reserve should not ever make a step into the markets because of temporary issues. So are we to believe that if it's transitory, that as soon as it's over, he's going to raise rates again, right? Right? I mean, so he did this because of coronavirus, as he said yesterday, and the impact that it's having. Okay, that's fine. So when the coronavirus is over, and it will be over, when that's over, when that's not an issue anymore, when Saudi Arabia and Russia finally strike some sort of deal and the oil prices start to normalize a little bit, he's going to raise rates again, right? We're going to get right back up to 2.5%. Is that what he's going to do? He's not going to do that. Well, wait a minute. You've already trashed the dollar. You've already added, by then it'll be $4 or $5 trillion to the balance sheet. He took debt and just added it over to his balance sheet, to the Federal Reserve's balance sheet. That's all it is. Why do you think that happens? Well, first of all, who's going to buy our debt? Number one, nobody's got any money because of the global oil crisis, the global crisis that we're having with coronavirus. Nobody's got any money. They're not going to buy our debt. They got enough problems. They're not spending money. They can't afford to try to bring some security into their sovereign wealth fund by buying U.S. debt bonds. Why would they do that? Number one, the Federal Reserve's already said that he's more than willing to trash our dollar. So why would they buy our debt when their debt's really not a whole lot worse? We have just taken the strongest dollar and the strongest economy in the world that everybody was clamoring to get and said, hey, don't hurry up and try to buy it because we don't need your money, so we're just going to trash our dollar because we'll just let the Federal Reserve to buy all that we need to monetize. That's what he did. Would somebody please tell Chairman Powell, because obviously he hasn't grasped this yet. When we trash our dollar, we just trash our dollar. It doesn't help us. We're not an export nation. What do we look like, China? Are we Japan? Are we becoming more competitive because our dollar is lower in value when we don't have anything to calculate that great cost, lower cost onto? We're not, what are we exporting? What are we exporting? 11% of our economy? And that's a high number. I don't even think it's that high. What are we exporting? We can't have people, politicians or anybody else looking at Japan and China say, we're just like them. We're not like the communist regime of China, and we're not like Japan. They live and die on exports. We live and die on consumers buying stuff, and we've just made it worse because now we are going to begin to put fear in the very thing that has lifted up our economy over the last 3 years, and that's consumer spending. Do you see how irrational this is? Maybe you do. Maybe you don't. I can tell you this much. If you don't understand it, you're in good company because there's a lot of talking heads on news right now that are in your camp. So maybe I'm the one that's wrong because this needs to be, I need to remind all of America, but most of all Wall Street and Federal Reserve. We are going through, listen now, we are going through a public health crisis. Got it? We are going through a public health crisis. We are not going through an economic downturn or a market downturn because our economy is weak. Because we have gone through all this weakness. We've been laying off people, companies, nobody's buying stuff. People are afraid of getting laid off. So the economy is weak. So the market's going down. That's not happening. It might because of what we're doing in the government, but that's not why. It's a public health crisis. Hey, remember to click the subscribe button right here on the screen, and don't forget to hit the notification bell
so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.